Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing United stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 14 billion market cap. They're trading at $43 a share and they have 328 million shares outstanding. United Airlines provides air transportation services in most countries. They transport people and cargo through their mainline and regional fleets. They also offer catering, ground handling, flight academy, and maintenance services for third parties. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have a small negative in 21. They reported 1.2 billion of free cash flow in 2022, a really nice improvement back to negative 260 million in 23, negative 745 million in trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. A big negative in 21, but they improved a lot. 700 million in 2022, then 2.6 billion in 23, up another 12% to 2.9 billion in the trailing 12 months. And their net profit margin is 5%. Revenue is a sales for the company that more than doubled from 25 billion to 55 billion. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 18 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $14 billion. We divide that by 328 million shares. And we get a calculated stock price of $42. They're trading at $43, so they're trading at a 3% premium. It's a sell according to the model. Do you think it's a buy or sell? Let me know in the comments. Simply, Wall Street is real bullish at $100. They say they're 57% undervalued. 21 analysts priced this stock at $69. They also say it's undervalued. There are 16 companies in the same industry as United, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend the most in CapEx, $6.4 billion. That's why their free cash flow looks so terrible, because they're buying so many planes. They're pretty leveraged. Debt to equity ratio 3.3. For every dollar of equity, they have $3.30 of debt. They don't pay a dividend. Negative 745 million of free cash flow. They rank third in market cap at 14 billion. Price to book looks good. They're trading at 1.3 times book value. They have the best PE. They're trading below 5 times earnings. We can't look at that price to free cash flow. They have negative free cash flow. Price to sales is equal to the median at 0.3. If a company has a price to sales 0.333, that means their revenue will be exactly triple their market cap. And their 5-year annual revenue growth rate is 6%, better than the median average. Here's their second quarter income statement. Revenue is up from 14 billion to 15 billion. Passenger revenue is up from 13 billion to 13.7 billion. Every segment is up. Cargo is up a little bit, so is other. Their biggest operating expense is salary, 4 billion, fuel, 3 billion. They spend 866 million of landing fees. Airports have a finite amount of space, so they charge a landing fee for anybody that wants to land on their premises. They spend 700 million of maintenance, then depreciation also 700 million. Total expenses 13 billion. Operating income is up 1.5 billion last year, and that's 1.9 billion. They spend 427 million of interest on their debt. Pre-tax income 1.7 billion, 400 million of taxes, net income 1.3 billion, up from 1.1 billion. So EPS is also up from 328 to 402. So to summarize, I have them trading at a 3% premium. They're ranking at 3 out of 10. Would I buy them? 1 out of 10. Their PE ratio is amazing, below 5. That's why they get a 7 out of 10. Financials 5 out of 10. Revenue improved a lot, up 126%. But they're still generating negative free cash flow. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.